Investing in the stock market can take dozens of different forms, and while most people think of investors as one homogeneous group of people, the reality is that investing should be adapted to the individual in question, which is why there are thousands of different funds, stocks, and other financial securities available to us in the stock market. Now, one of the most popular types of financial securities that has gained tremendous popularity and capital under management over the past decade has of course been the exchange traded fund. With over 1,000 ETFs available in Canada, there are ETFs that meet a wide range of investment objectives. They're generally low cost, liquid, and quite transparent, making them attractive to many different investor types. And while there are thousands of individual ETFs to choose from, many of which we've already covered right here on the channel, one newer type of ETF that's not as spoken about yet is the Asset Allocation ETF, which offers a really interesting angle towards building a portfolio without having to actively pick and choose individual stocks or ETFs to still make up a portfolio that's suitable for your needs as an investor. So that's exactly what we'll be speaking about in today's video, which I'm happy to mention is sponsored by BMO ETFs. That actually happens to be one of Canada's largest ETF providers, with well over 100 ETFs available for Canadians to choose from, including a variety of asset allocation ETFs that fit perfectly with the theme of today's video that I wanted to go with. Shout out to you if you've been a long-time subscriber to the channel, and if that is the case, then this shouldn't be the first time that you hear me speak about asset allocation within the context of creating a stock market portfolio. Essentially, the idea here is that depending on factors such as your age, your capital on hand, income, and risk tolerance, just to name a few, you're going to want to allocate a certain weight of your total portfolio to various different types of financial securities and sectors of the market in order to gain diversification in a way that meets your needs and risk tolerance as an investor. And generally, asset allocation would look a little something like this for investors seeking out a more balanced approach, say 60% towards equity positions, so stocks or ETFs that are primarily made up of company stock, and then say 40% towards fixed income, so bonds or any type of interest-based position, where each of these two portions of the pie would be made up of individual positions within each of those categories of financial securities. And traditionally, you'd either get a portfolio manager to do this on your behalf, which can become quite expensive, or if you're a DIY investor, which if you're watching this video, chances are that is you, well, you would take this on yourself and then periodically rebalance your portfolio's weighting to match the desired asset allocation that you're after. In the case of asset allocation ETFs, the ETF provider takes on the role of creating and maintaining the desired asset allocation split between equity and fixed income under various allocation percentages that can appeal to a subset of the market. So let's actually cover a handful of these right now to give you a more visual idea of how these actually work. Alright, now what's cool about asset allocation ETFs is that they're generally categorized by the providers as being either from a growth, balanced, or conservative approach, giving potential investors a better idea of which one might be best suited for them. Now in BMO's case, they actually have a variety of different asset allocation ETFs for different investor profiles and investment objectives, making them a good fit for today's video. Let's take a closer look and then concentrate on a handful of them that might be more suitable for my audience. So in regards to asset allocation ETFs specifically, they currently offer 6 options for investors, 3 of which are traditional style asset allocation ETFs, while the 3 others offer some alternative options such as an all equity focus and a monthly income focus, as we can see right here. So we have ZBAL, ZGRO, ZCON, which are the more traditional style asset allocation ETFs, and then alternatives such as ZEQT, the all equity ETF, balanced ESG, and then the monthly income ETF. Now in this particular case, and for the sake of today's video, let's pretend that you've already determined the fact that you're looking for a growth focused asset allocation ETF based on your time horizon, financial goals, and ability to tolerate risk to a greater extent. And for this, we'll be taking a closer look at BMO's ZGRO ETF, which is the BMO Growth ETF. Alright, so the ZGRO ETF is actually quite simple to understand. The overall goal of this ETF is to offer investors long-term capital appreciation by investing in global equity and fixed income ETFs itself. And as the name of the ETF would suggest, with a growth angle to it, the ZGRO ETF aims for an 80% equity and 20% fixed income split, which then gets rebalanced on a quarterly basis to maintain this target asset allocation split, right? So that's that's definitely one of the main benefits of any asset allocation ETF. Really, if you're looking for a more passive and hands-off approach to your investing, rebalancing happens automatically within an asset allocation ETF without you having to ever worry about it. And this is actually one of the toughest things about investing, where you're essentially trimming your winners and allocating back to your losers, but is an important part of still keeping on track to reaching your goals and staying within your risk level. Now, what's interesting about the ZGRO ETF in question is that instead of holding hundreds of individual stocks like some other asset allocation ETFs, well, this one simply holds 9 other BMO ETFs within it that together provide exposure to hundreds of positions spread out across the globe. For example, as we can see here, as of right now, it holds roughly 33.5% of its weight in an S&P 500 ETF, followed by 20% in a TSX composite ETF, where based on this donut chart, it's evident that North American positions dominate the fund, but you still get exposure to worldwide positions nonetheless. Now, you're probably wondering, for this level of passivity on your part, the fees associated with an asset allocation ETF must be extremely high, right? Well, in fact, that's not really the case, in contrast to, say, an active fund manager. In fact, as we can see here, the annual management expense ratio, or MER for short, for the entire suite of BMO asset allocation ETFs, not just ZGRO in this case, is 0.2%, which means that with a $10,000 investment in this ETF, you'd be paying $20 in annual management fees, which really isn't too bad. So all in all here, for what you're getting as a well-rounded investment product, the fees associated with it are actually extremely competitive. And finally, what type of returns can we expect from an ETF such as ZGRO? Let's take a look. Now, in regards to the annualized performance for ZGRO, as we can see right here, over the past 1 year time frame, negative 0.86%, which is to be expected, honestly, considering where the market has been trending overall over the past year. 3-year return, 11.24% for annualized performance. That's each year over the past 3 years. And then since inception, around 7.26%. Now, in parallel to this, growth of $10,000 investment, for example, at inception in January of 2019, we can see that over the past roughly, 3.5 years, we could see that it would have grown to just shy of $13,500. The real value add here with an asset allocation ETF such as ZGRO is that added level of passivity, ongoing rebalancing that you don't have to ever worry about, as well as the baked-in diversification that a fund like this one is offering. Ultimately, determining whether or not an asset allocation ETF would be suitable for you depends on a variety of factors relating to what you're after from your investments. For someone looking to actively manage their investments, well, of course, an ETF like this one wouldn't be suitable. But for most individuals who are simply looking to gain exposure to the stock market over time while continuing to work their career, this can truly pose as a viable option that could be worth considering. And while many ETF providers do offer asset allocation ETFs, BMOs are one of the lower cost options, and BMO also offers some interesting versions of them, like an ESG focused asset allocation ETF and the BMO monthly income ETF, which has a 10+ year track record. So as we've covered, BMO offers a variety of options to choose from that I'd encourage you to check out if you're interested, using the top link down below in this video's description. Additionally, if you want to learn more about stock market investing utilizing ETFs and other investment vehicles to make a well-rounded investment portfolio for yourself, make sure to check out my full stock market investing course that you can find over for free on Skillshare. Thanks a lot for watching, and I'll see you in the next one.